Welcome back to the Stockwell Eldridge Show. I'm Jason Stockwell with RE/MAX Results.
And I'm Dawn Eldridge with RE/MAX Results.
We have two experts in-house today. We're talking to you about how you can finance your new construction home during the parade, since we're right in the middle of the parade. And when you come into these new houses, they sometimes are jaw-dropping as far as how nice they are. And we see people come in and they love it and they want it. And they could see themselves living there. And then they say, oh, well, how much? And then they kind of get sticker shocked by the price just because of the cost of construction and new builds and how much it costs. How can you put that into a plan to afford that and still be financially sound? That's what we want to try to create for you today, is some information on that so that you can actually get into the home you want without totally going into bankrupt. Well, you obviously don't want that, but
Well, and financial stress. And I forgot actually.
Yes, financial stress. Better term. Thank you.
A good point. Because we have our Builder's Best program too. We've got an extended lock program. So if you do find one of these houses, well, okay, I've got to get my existing house ready to sell, and it's going to take them a couple months to build. But then I keep hearing with the election, rates are going to go up. We have a great option for you to actually lock into today's rates for tomorrow's prices. That's kind of what our tagline is. But
that's awesome.
It's really a great opportunity. And again, there's so many financing options. What Jack is talking about, what we have to offer at Wells Fargo. If you do find that dream home, we're going to help you. Now, the best thing is get pre-approved first, maybe before you go out looking at the parade, so that if you do get excited, at least you know what you're...
You have an idea.
What you can afford and so forth. Because it is sometimes... oh, shoot, like you get all excited and you see this house and everything. And a lot of people do think that they would qualify for more, but they don't take into account that their student loan debts or the property taxes and all that kind of stuff. They think that they can afford it, but then, they forget about all the other things that come into play. Or sometimes income isn't always what... especially with their self-employed borrowers. We know what they're taking in, but then what they report on taxes can be different. Yeah. So it's really good to get I think it's great, go out in the parade, but make sure you talk to, like I said, Jack, I'm sure you talk to people about an option to buy with reverse. We talk to people all the time about just a pre-approval. Have an idea, get prepared so that when you go in, and then if you can upgrade to those options. So maybe whatever your budget is, and then you're looking at this new home, you're already going to know, okay, could I afford those upgrades? Could I afford that end unit? All those kinds of things. I know when I bought my house, new construction, it was the same thing. I had my budget. And I was like, Chris, you want everything because it's all pretty and fancy. You want the fancy lighting and the carpet and all the upgrades. And those builders are more than happy to sell it to you. So it's important to be prepared.
Well, and the other thing, too, for Roseville Garden Station, for our development there in Roseville, there's parade incentives on that, so the upgrades, there's two options for upgrades on that. So you can take the option and upgrade, or you can just get a price incentive on the purchase price of the property, or towards your finished basement as well. So there's all kinds of options there.
That's awesome.
If you haven't seen Roseville Garden Station, the upgrades are gorgeous, and there's plenty to choose from as well. They've got a lighter palette and a darker palette, and you can combine them within levels, and it's really, really a fantastic property. So definitely come and check it out. It's gorgeous. And we have ways that we can help you get in there now, too.
Well, and, you guys, we talk about all the time, inventory is so low. So now's a great time. Get yourself into that new home. You talk about parents, being concerned about, having that one level of living and so forth. So, yeah, what a great time to put your house in the market and move into something new and fresh and easy.
And I have a question. So back for reverse mortgages, Jack, on reverse mortgages, they got a bad reputation, at least from what I've heard. And until I met with you, I didn't even know, one, that they could be used to purchase. But I think a lot of the reputation came from because were they losing? It's kind of like the foreclosure crisis. Was it something where they were losing their homes and they pinned it on the ARM product for the conventional product? Was it because they're losing their homes and they pinned it on the reverse mortgage product? Is that what happened back before it got restructured?
My understanding, the reason for defaults on these loans, and there was about a 10% default rate,
which is very high. 10% is very high,
which is quite high. One of the
Typically,
reasons
2% or under is what you want to be at, right?
One of the reasons is they did not have any financial income or asset requirements for the borrower. I feel another one is the borrowers during that time had to take the full amount of the proceeds at closing. They did not have the option to leave a portion on line of credit, maybe take out enough just to pay off their existing mortgage. So, forced to take that large amount of money, some aging adults were taken advantage of, and so therefore they had spent down what they were using for the reserves. And another reason was if one of the spouses prematurely died, who maybe was the spouse that provided the most income, in other words, through pensions, this type of thing, that now they left with the surviving spouse didn't have enough income on his or her own to be able to make the insurance payments, to pay the taxes in a timely manner, and to maintain the home. And the reverse mortgages have the same requirements, typically, that conventional mortgages do in many respects, is you do have to maintain the home. You can't let the home waste. Another is you have to pay your taxes in a timely manner, and you have to insure the property. If you don't insure the property, they'll find an insurer for you.
Yeah.
Right, so there's a lot of similarities to the conventional mortgage, to the reverse mortgage program with respect to the obligation of the borrower. So that is what I see was a problem. FHA's addressed that issue. There's now an income assessment that has to be done, and the borrowers that are eligible have to be able to support that they can afford to pay the taxes and the insurance. And if they can't do that, we have to turn them down. And this wasn't the case years ago. And I think some of the bad rap that comes with the reverse mortgage is a lot of misinformation. People still think that the government takes over your home, similar to what happened back in the Roosevelt days during the New Deal. The mortgages that were available prior to the New Deal were 5-year mortgages, interest only. And when the 5 years was up, if you hadn't saved enough money to pay off the banker, you were at their mercy to go in and refinance, or they would take your home. So that was the extent of the mortgage. Well, to try to instill some more confidence in the banking industry, they introduced the 30-year fixed-rate mortgage. And what do you think how it was received? Well, the government's going to take your home. You know, there's too many pages. It's too confusing. You never want to do a 30-year fixed-rate mortgage. And look at today. I mean, that's the preference of most people.
Yeah.
They want to stretch it out
Well, and I
longer.
think too, and that's what I remember back in. Wells Fargo no longer is a lender of reverse mortgages, but I know that was a concern, was the taxes,
That's
the
exactly
escrow
right.
account, because people would pay their mortgage, and then it was like, oh, geez, Wells Fargo's foreclosing on these, 80-year-old grandma.
Yeah.
Well, it wasn't us; it was the state, because what sometimes people don't realize, and even just in a regular mortgage, is even with association dues. I mean, you're talking about buying a house with association dues. That's still a lien against your property.
Yep.
So if you pay your mortgage on time, but if you don't pay your taxes or your association dues, yes, that can start a foreclosure or lien against your property. So I know I live in a townhome, and I go to my board meetings, and I look at my reports, and I see the amount of outstanding dues, and I'm thinking, people don't realize it, that those association dues can be liens against them.
So the reverse mortgage is now, with the asset assessment, which we do to help aging adults qualify for this, if they can substantiate that they can make the payments on that, provides an incredible advantage for people my age group, right? Because we don't want to go into the retirement fund if we don't have to, because we get into all kinds of challenges as you retire. Your income is done. So if you need additional money and you wanted to go in and get a traditional home equity line of credit, you're not going to qualify in most cases because you can't support the income. And if you're in a home equity line of credit that you maybe took out at, 55 years old, after 10 years on a home equity line of credit, it amortizes to a 20-year loan. So now all of a sudden you're 65 and your payment went up a substantial amount, but your income has not gone up. Yeah. So there's kind of a double-edged sword with the home equity line of credit for people in my age group, because if you can't refinance that, you've got to make those payments, or you could be forced to sell your home to retire that debt.
And when you said, I'm sorry, Jack, if you said this earlier and I missed it, but when you say you do the analysis, the asset analysis piece for the taxes insurance, so you're just checking to see that they have so when you do, if you were to do a reverse mortgage for purchase, again, they're not escrowing, correct?
That's correct.
And
They
so,
can pick,
is there options to have that money set aside in some type of an account, or you're just checking to see that they have those assets to pay? I mean, I guess I'm thinking if I'm a person and I'm looking out for my parents, and we know, I mean, sometimes they get forgetful or not mindful of those things. So, is there a separate account that can be set up where those money is put aside for future payment of escrows, or not?
It's not that you can't set up an escrow account, but it ties up a substantial amount of your equity by doing that.
Okay.
So what FHA requires is that you list a secondary person to be in contact with. So in the event that mom or dad forgets to pay the insurance or forgets to pay the taxes or some other type of expense that would require, immediate address, they have at least one or two other family members to contact to say, look, we didn't receive the insurance. I mean, they're not going to declare your loan in a default, but
Right.
they're going to contact mom or dad, and if that doesn't resolve it, they're going to go to the secondary sources of contact.
Do most counties have that where if you and I don't know because I escrow, but do most counties have anything set up where you could set up like an automatic deduction each month to pay taxes or not? I mean, I know with your homeowner's insurance you could have an automatic deduction each month for insurance.
I don't
but-
think the counties do
I'm
that.
not aware of that, if there
Yeah.
would be,
So you would just have to do it on your own.
right?
Yeah,
Okay.
and the counties, and if you pay a day late, you pay the full late fee.
Yeah. Yeah.
So we're-
Because there's
so-
no mercy. I mean, I guess you could set up through a bank, I'm sure. Or, you go into a bank and they could set that up for you, but
And as people age too, usually somebody will come in and help them with bill paying,
right.
Yeah.
and they'll set up the schedules for that. So it's not likely, that it's...
Sometimes those are the best. They pay the most on time than anybody else.
Well, you look at the
Well-
credit scores of aging adults. I mean, they're up in the 800s.
Yeah,
I
they're the
mean,
best.
they paid their bills. They're very conscientious about that.